This is Martin Rimes from HitTheMarkTrading.com with a weekly wrap-up for you. Today's date, November 15, 2013. Now it's actually in the morning in USA, about 7:30 a.m. So this wrap-up is for European traders. We're going to look at the crude, S&P 500, Euro Yen, and the bond market. So let's look at these individually. The first one we're going to want to watch is the Euro Yen. Okay. Now you remember my charts are very simple. The Euro Yen is our indicator of risk acceptance versus risk aversion. And what we find is we're making just a nice move higher here just to retest the high. So I better put a little trend line there. Okay. Just retest that. That looks like a done deal. Okay, the other thing that we can do is we can, let me move this down 1 second. Whoops. All right, let's just project where we might go. All right. So it looks like we could run all the way up to, let's say 136 area. And what you find when you make these trend lines is that we just bounce. That's all we do, up and down, just between this nice channel. A lot of times if we overshoot to the downside, we will see the exact same overshoot to the upside. So your message is, if we break through the line here, successfully testing resistance, we're going to go much higher. Let me just make this exact, okay? Let's see. Okay. So this looks like 136.34. All right. Very good. Now, if the Euro Yen is up, we expect the S&P 500 is going to be up. So let's take a look at that. Well, we're never disappointed with that correlation. All right, what's interesting here on the S&P 500 is that, normally one of the most absolute reliable seasonal trades is placing the week of the U.S. Thanksgiving holiday. You just get long and you hold for like 6 months. Very, very reliable. Well, it would have been nice to have seen some type of a pullback. We didn't get a pullback. Okay. So all of this pop higher. This is Wednesday. This is Thursday. All of this pop higher is based on one event. On Wednesday, we released, we saw the release of Janet Yellen's comments to the Senate Confirmation Committee, so everybody got excited. And then over here, Thursday, continuation. So we are in, and we remain in very, very strong trend and momentum on the S&P 500 futures. We are so close to 1800. We're at 1791 now. We're so close to 1800. That's a done deal. So what I would expect is that there's a lot of shorts there. A lot of orders waiting just because it's a nice round number. Okay. All right. It would have been perfect to have gotten a pullback before the seasonal. We may still get it. But when November 22nd comes around, we've got to go long. We have to, because of the statistics. So unless there's some glaring technical reason telling us, no, don't do this, we will be going long. Okay? I think the next major event for the market is going to be, as far as S&P 500 is concerned, is going to be the retail sales from U.S. holiday Black Friday associated selling, right? That's the Friday right after Thanksgiving. And that's when it's like massive shoppers get out there. And that's a real judgment call on consumer behavior. If the results are worse than expected, that could provide some type of a market pullback. Of course, better than expected, and this thing's going to go up very easily, much higher. Okay? All right, you can see that basically we have been non-directional with an upward bias since late October. Okay? I think we can agree on that. It wasn't until the Yellen notes were released that we saw a move higher. Okay? All right, very good. Now let's just move this back and go to the bond market. We're looking at daily charts, by the way. So here's our bond market chart. I'm going to move this line over a little bit. Okay. And Yellen said yesterday in the meeting that she's all for more bond buying. The check's ready to be written. Well, that's the 800-pound gorilla saying, I am going to continue doing this. I'm going to continue being the largest buyer of bonds. So the price moved up on this. Again, moved up on Wednesday and Thursday. Got a little bit of profit taking now. Okay. Now with our moving average here, it's very important to see this price move above the 34 exponential moving average. That would be a vote of confidence. This tells us if we see a rise, then we're going to come back up and retest these highs, maybe go higher. Okay. I think all of the talk about premature tapering in December, I think all that's off the table now, based on Janet Yellen. All right, very good. So the bond market looks like we're in a downtrend as characterized by lower highs. But you have to remember, this is an event. This is an event now. And that can cause a pop higher. All right? Very good. Let's go to the crude market. Now, the crude market has done everything we thought it would do. Drop, drop, drop. Okay? We have long-term target here of, I should say longer term, of 90.60. 90.60. It is a level that price absolutely adores. So let me just put the weekly up here. Okay. All right. I showed you this last time. This is 90.60. So everything's going according to plan as far as I'm concerned. All right. Now, we did get a little rise out of crude yesterday. And all of the rise occurred during Janet Yellen's testimony. Because you've got to understand, crude will trade as a commodity, a physical commodity, yes. Crude will trade as a financial instrument without regard to supply and demand, yes. And finally, crude can trade based on geopolitical event around the world, especially anything in Middle East threatening crude supplies. Okay. Now I noticed Brent crude was much higher. U.S. crude in sympathy will sometimes move with Brent crude. Okay. But so far, the trend and momentum is so incredibly strong to the downside. So incredibly strong. It is limiting any upside movement. Can we go higher? Sure we can. We're basically consolidating. That's what price does. We drop, consolidate, drop, consolidate, drop, consolidate. All right, so again, we're looking for 90-60 unless there's some type of event. One thing we know for certain, there's no global economic recovery of merit. Everything is extremely sluggish, and the implication is crude oil is just not finding the demand. Okay? All right. All right, so that's it for your weekly wrap up, and I'll talk to you later. Please check out hitthemarktrading.com. Sign up for my morning email blog, Rooster Call. I look at all the futures, and I look at the news wires, and I send that out U.S. time, before the 9:30 a.m. Eastern Open. I'll talk to you later. Thank you very much. Have a good weekend.